Hi, welcome. Mary Ellen McGonagle here with your Friday afternoon weekly Edge show for July 21st. Today, as usual, we're going to take a look at the broader markets, see where did we close the week, can we be on the lookout for going forward, and then beyond. We're seeing a bit in the way of sector rotation, sub-industry group rotation also that I do want to share with you. So we will dive into that as well as select stocks. And initially, we'll look at some of those headline news that drove the markets last week. And then last up is viewer question of the week. And it's all about potential areas outside of the U.S. market look compelling. So let's go ahead and take a look at some of that news from last week that gave us quite a volatile period. First up, earlier in the week, we did get economic data that was fairly light. Retail sales rose only slightly. We did see industrial production fall in June, and that's generally good news relative to the Federal Reserve wanting to hike interest rates when we see the economy not being so very strong. We also did see housing starts post their largest decline in a year, and that gave names in that group a reason to pull back. And later in the week on Thursday, we did see weekly jobless claims fall. Now, this is not great news, certainly from the Federal Reserve. They want to see jobless claims rise. They want this high employment rate to come down. So in turn, after that report, we did see interest rates jump, which was one reason that growth stocks pulled back on Thursday. But even more impactful was the fact that both Tesla and Netflix tumbled in response to earnings that weren't entirely out of line. So that got these bigger mega cap names rather spooked. So we did see a late week pullback there. The NASDAQ 100 is experiencing a rebalancing that will take shape on Monday. And the purpose there is to reduce the weighting of those mega cap magnificent seven that have been just driving the NASDAQ to new near-term highs. So that was another reason that we saw these mega cap names bounce around quite a bit. In the end, they did each underperform in the case except for Apple and Microsoft. Now, next week, we will see earnings season begin in earnest, and that was one of the other big drivers of stocks last week, those companies that came in ahead of estimates, and I'll share with you some examples and what took place. Also, next week, we are going to get critical data. The Federal Reserve is going to announce their interest rate policy, and Fed Chair Powell's comments after regarding policy possibilities going forward are also going to be very closely watched. We're going to get the first GDP for the second quarter. That number will come out. Also, core PCE data, that's personal consumption expenditures, very closely watched by the Federal Reserve, their primary gauge for inflation, and that's due out later next week as well. So pretty busy week as we head into the last week of July. So let's go ahead and take a look. Where did the markets close for the week? And here we are with the daily price chart of the S&P 500. The S&P was up a little less than 1%. It pulled back a little bit on Thursday due to the drop in those mega cap names. However, there was a nice broad-based rally around that was able to really stem the losses. In the S&P 500, the uptrend remains in place with the index above this 10-day simple moving average, positive RSI, and positive stochastics as well. So good news for the S&P. We can take a quick look at the NASDAQ composite, and I'll go ahead and share a chart here. What you'll see is that it did pull back a bit more. It was down more than 0.5% for the week, but in essence, the NASDAQ was very much in an overbought position, similar to the period that we experienced twice in the month of June, which in turn did evolve into a pullback into the latter part of June before resuming its uptrend. So we are similarly experiencing a pullback out of that overbought position in the RSI as well. But both metrics, the stochastics here and the RSI remain in positive territory, and we are going to keep an eye on the NASDAQ because it closed just below that 10-day simple moving average, which would make this 21-day its next area of possible support. So from here, let's take a look beyond these broader markets and look at the underlying 11 sectors. In the S&P, it's a 2-month daily price chart view. I've added a relative strength indicator and sorted it in descending order. And the purpose, if you do this on a weekly basis, such as I do with this show, you can really stay on top of rotation. Where are the money flows in and out of these sectors taking shape? And first up, we can see at the forefront here, financials, healthcare, and industrials, which is quite a bit different than we've seen over the prior months. We can take a look down here in this lower quartile, and it is technology, consumer discretionary, and communication services stocks that are down in this lower quartile. Of course, each of these sectors have major mega cap names as their part of their components, so that would be one driver. But net, we did see underperformance, relative underperformance in these growth areas, as we are seeing more defensive areas such as XLP, staples, healthcare move up to the forefront along with utilities. Let's take a quick look at these charts. Utilities charging up higher over the last 2 days. Nice big heavy volume there. Also, we can see staples reversing this downtrend with a move above that 50-day. Nice high volume characteristics and momentum shifting to the upside. Last up, we will take a look at the healthcare. This was the strongest sector for the week, up 3.5%. Take a look. This nice lengthy base breakout, positive momentum shift, all about earnings. We saw a number of pharmaceutical stocks and other areas report strong earnings. I'll get into other reasons why healthcare is on the move higher as well. So beyond this, I'm going to share with you ETFs that I find to be super helpful and powerful, and again, keeping you on top of where that strength is so that you can participate in that. And 2-month daily price chart view with that RSI. So here is one reason we saw a nice upward move in healthcare, and it is the medical devices ETF, IHI, which had been in an uptrend, and it did experience further upside, up about 1.5% for the week. A number of companies in this particular space are trending higher. Also up here at the forefront talking about healthcare is biotech names, IBB, the iShares NASDAQ Biotech ETF, and this particular group was up 2.5%. And we can see this recent downtrend is reversed with a move above these moving averages and positive momentum. And this generally does indicate a risk on appetite, and certainly some larger names in that biotech space are beginning to reverse their downtrends. Other areas I talked about, financials on the move. This was the group that was up almost 3%, and a big reason was this significant rally in bank stocks, up 7.5%. This is KRE, the regional banking ETF, and again, all about companies coming in with strong earnings. Bank of America, Zion Bank, and so on, all helping those names, and in addition, a broadening out into other bank stocks as we're seeing stabilization in these companies, which is good news, certainly for the markets. As we move through to these weaker areas down in these lower quartiles, we did see a pullback in semiconductor stocks. This is SOXX down at about 1.5%. Metrics are still constructive, however, a pullback to this 21-day. And your RSI and MACD are both in positive territory. I will tell you it is on a case-by-case or stock-by-stock basis, and I will get into this with my MEM Edge report that will come out on Sunday. Also taking a look at some of these weaker areas in technology, we can see that we did see a bit of a pullback in software names, but really ended up quite constructively. The group was flat for the week with the momentum on that RSI and the MACD still in positive territory, so the uptrend firmly in place among those software stocks. One other area I talked about was that uptick in interest rates. This is the yield on that 10-year, and here's Thursday's pop that did push yields up to that 3.85% level and then negatively impacting select areas of growth. So as we can see, there is some rotation taking place, more defensive areas coming to the forefront, high-flying technology and other growth areas pulling back slightly, but overall the uptrend in the markets remains in place as stated earlier. However, we do have a very busy week next week, so you will want to stay on top of the markets as well as, of course, your individual stocks. From here, I did want to share with you, I talked about the question of the week relative to which stocks are outside of the U.S. that are seeing a lot in the way of vibrancy. And this is the iShares Brazil ETF. And a couple of things I wanted to point out here with this ETF. First up is we did see an advance shape up here in the beginning of June. I wrote about it in an article here on stockcharts.com. The reason was because Brazil had just put out data relative to their inflation, and the number was getting very close to their target inflation level. We did see a sharp advance. Subsequent to that, this ETF did pull back, but this week, particularly today, we saw a gap up on big volume with positive momentum. I'd like to see this MACD black line get up through the red, similar to this period, to confirm a new uptrend. But this is all about because Brazil will begin an easing of their monetary policy, and that in turn will continue to help their economy as well as the underlying stocks. From here, we can take a look at a couple of names in the Brazilian markets. And first up is a company, XP is the ticker symbol, and they are a Brazilian brokerage financial investment firm. And today, actually yesterday, we got that initial base breakout, and the stock has added to that. Here we are with that base breakout, a continuation rally today, positive momentum here with that RSI, and here's that crossover on that MACD. You can see that once this stock gets going, it does have the ability to advance quite a bit higher and remain in an overbought position. Another stock that we can look at from the Brazil stock market is an energy name, and that is PBR. And here we can see that the stock is in the throes of reversing this recent downtrend. The momentum did remain positive during this pullback period. That's good news as the stock came out of an overbought position. And at this time, a nice MACD crossover with that black line up through the red would confirm a new uptrend in place as the stock heads towards a $15 base breakout. That's it for this week, everyone. Have a great weekend. I'll look for you here again next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.